In general, an increase in the base rate is considered as one of the factors that cause house price declines. However, looking at the asset market during the period of interest rate hikes after the financial crisis, the direction between interest rates and house prices are not consistent. According to a research report on the effectiveness of monetary policy through asset price pathways published by the Korea Financial Research Institute in 2016, the stock market is quickly reflected in supply and demand rather than sensitivity to interest rates, whereas in real estate, buying and selling decisions are determined by supply and demand. The process is relatively long, and prices are often determined by various factors such as supply and demand and psychological factors. According to past experience, the response to a fall in house prices during a period of rising interest rates occurs with a lag of 12 to 15 months. It is said that the impact of house price declines in the middle to long term is greater than the short-term impact. The real estate price decline is expected to begin in August. Looking at the correlation between interest rates and house prices, when interest rates rise, house prices typically fall after 12 to 15 months. On July 18th, the Korean Research Institute for Human Settlements analyzed the effect of interest rates on housing prices for 31 years from March 1991 to March 2022. The interest rate cut had a very elastic effect on house prices in the short term, reacted right away. On the other hand, in the case of interest rate hikes, there was a time lag of 12 to 15 months, and the effect was shown. In fact, the base interest rate, which started to rise in July 2010, has been on a downward trend since June 2012. But the National Housing Sale Price Index in June 2013 recorded 70.4, down from 70.9 a year ago. The Seoul Housing Sale Price Index also fell further, from 65 to 63.2 after the interest rate hikes period. Research institutes look at the 31-year period of interest rate cuts and increases. In the first period of rate cut, February 2001, the second period, May 2003, and the third period, October 2008, the effect of interest rates on the housing market was not so great. From July 2012, the fourth period of interest rate cut, the impact of interest rate shock on housing prices has grown even greater. During this period, the government relaxed regulation on taxation and finance, revitalizing demand for housing and encouraging purchases. At the same time, it was a time when the base rate was lowered to lower the financing cost and the liquidity preference of consumers was greatly expanded. The fifth period to cut interest rates was July 2019, when interest rates were cut in response to the US-China trade conflict and COVID-19. During this period, the government strongly suppressed demand with various real estate regulatory policies. However, as the base rate was lowered and liquidity was supplied to the market, the demand that had been suppressed until now turned into transactional demand, which greatly increased housing prices. On the other hand, the first period of rate hike was February 2000, the second period was May 2002, the third period was October 2005, and the fourth period was July 2010. Until the fourth rate hike, the impact of the interest rate shock on housing prices was relatively small. From November 2017, the fourth period of interest rates hike, the impact of interest rates on housing prices has become much stronger than in the past. This was the period when the government implemented a policy to curb demand to stabilize housing prices. The sixth period of rate hikes started in August last year. During this period, interest rates were raised immediately after housing prices rose sharply from the ultra-low interest rates of 0%. In the subsequent period, the considerable amount of liquidity released in the market and the exchange rate rise along with inflation due to the Russia-Ukraine war are expected to continue for considerable period of time in Korea as well, according to the U.S. interest rate hike notice. House prices fluctuate regardless of the direction of interest rates. From November 2017 to June 2019, the base rate rose 0.5 percentage points and then fell again. During this period, the National Housing Price Index rose from 77.3 to 79.3, and the Seoul Housing Price Index rose from 70.4 to 78.2. After that, the index rose further as the base rate fell again. Of course, during that period, unprecedented low interest rates due to COVID-19 continued, and there were many other variables. The reason the relationship between interest rates and house prices is not direct is because of the characteristics of the housing market, since interest rates as well as various factors such as supply and demand and psychological factors have an influence. The possibility that a single variable in interest rates will influence house prices is limited. In particular, government policies have a significant impact on the market. However, if volatility is not product for a short period of time, it has been stepping up in the long run. When looking at asset prices, such as house prices, during the base rate hike period since 2008, when the Bank of Korea changed the system from the correct target system to the base rate system, there is no clear direction between interest rates and asset prices. From July 2010 to June 2012, right after the global financial crisis, the Bank of Korea raised the base rate by 1.25 percentage points from 2.00% per annum to 3.25% per annum. On the other hand, the Seoul Housing Sales Index fell from 65.9 to 65 during the same period. The base interest rate and house price did not affect either in direct or inverse proportion. The problem is the magnitude of the shock response to the sixth rate hike that started in the second half of last year. It seems that the size of the shock is larger than before. The timing of the shock response is faster, and the duration of the shock is longer. Moreover, as the Bank of Korea took a big step to raise the base interest rates by 0.5 percentage points on July 13th, the burden that the real estate market would freeze further increased. In the sixth period of interest rate hike, the impact of the interest rate hike on the housing market was more severe in the mid to long term than the short-term impact. Considering the recent high inflation rate, which require an additional base rate hike for a long period of time, downward pressure on housing prices is expected to increase further in the future. Research institutes also view the possibility that an interest rate hike will have an immediate impact on the real estate market is limited. However, as compared to the previous interest rate hike period, the interest rate hike implemented in August 2021 is expected to accelerate the downward stabilization of house prices, which has another bear market as it continues amid perception of high house prices and concern about an economic recession.